Consistently beating the market by hand-picking individual stocks is a very difficult endeavor. That's why I'm an advocate of low-cost, passively managed ETFs. But owning individual stocks sure is a lot more exciting, and we are determined to find a way to consistently beat the market with a well-managed portfolio of individual stocks. And yes, I did say we, and I'm not referring to my imaginary friends this time. More to come on that. The HODL Factory, which is what we call the managed portfolio, has destroyed the returns of the market by over 18% since inception. I'm going to tell you all about it in this reveal of my portfolio of individual stocks. If you're new to the channel, welcome. My name's Jeff Teeples, and here we aim to grow your wealth with simple, time-tested solutions. Please transact with that like button, subscribe if you haven't already, and drop me a comment down below with anything that comes to mind as you watch this video. All right, let's get the quick plugs out of the way because I can't stand when people do them at random mid-video. Check out my Seeking Alpha link down below if you're interested in trying out Seeking Alpha Premium, which I love, it's amazing. And also check out my Amazon storefront if you want to see all the books that this nerd has been reading lately. And you know what time it is. Let's grow. The backstory. Let's begin with the we part of things. My best friend Hutch and I got into investing around the same time many years ago. Our friendship goes way back to the 6th grade. We roomed together in college for 5 years, and he married my little sister. We will have plenty of stories to tell in the years to come. But sticking with investing for now, we both like to roll with low-cost, passively managed ETFs. But we've also picked our fair share of individual stocks over the years as well. And I don't want to make the guy look too good here, but he is the one that turned me on to SCHD for the value/dividend section of my portfolio. And I love the idea of rolling with passively managed ETFs like SCHD, or my favorite, VGT, VOO for an index fund, and everything in between. But I've always had a strong curiosity and desire to outperform the market by managing a basket of individual stocks. I've wanted to create my own ETF, and I still do, by the way, long term, for a long time now. I'm really summarizing here, but I wanted to find a way to beat the market most years and overall, while also paying and growing quality dividends over time as well. Something like VGT and SCHD having a baby and taking the best qualities of each of them, and especially SCHD's stable floor in a bad market. Hutch was the perfect partner to get this thing rolling with. He's not as numbers nerdy as me, but he's a big picture thinker that has the perfect temperament for this stuff. And just like that, on 4/20, of course, 2023, the HODL Factory was born. The methodology. We started from ground zero with basic conversations about the factors we like in the ETFs we already owned. I threw together a simple screener on Seeking Alpha that we used as our base. It has now evolved into 10 filters that each company must pass to make their way to the scoring spreadsheet. I'm not going to spill the beans on exactly what we screen for and how we score it. It is an evolving process that's being ironed out each quarter. I will say that a couple weeks ago in our most recent update, 149 companies passed the screener to ultimately make the spreadsheet. I don't consider myself a guru or an expert in any one thing, because the more I learn, the more I feel like I don't know. You know how that whole thing works. But I will say I did used to produce financial statements for a company I worked at, and I can make Excel pretty much do anything. And Hutch is here to keep me from going too crazy in the science lab. The scoring system currently assesses 12 categories, each of them having a custom modifier for weighting based on the importance. We take the top 25 companies by total score. And there are some other caps and buy-sell rules that will be applied, but you're probably bored at this point. I'll show you the exact holdings and their performance in the next section. The results. This thing has been alive for 14 months. It is incredibly early in the journey. Although it's gone well to this point, I'm not exactly declaring myself the next Warren Buffett. We still have a lot to learn about this stuff. Another note is that the fund's turnover has been high so far, and this is not ideal. It'll be much lower turnover in future quarters when our methodology is completely ironed out. This is especially important to Hutch because he's in the 37% tax bracket. We do have rules in place, kind of like SCHD does, that will hold onto a company until it falls out of our top 50. We have ignored these rules so far because core changes are being made every quarter at this point. Our invested dollars are still low at this point because we knew that there would be a lot of experimentation in the first couple of years. I wouldn't recommend diving into this portfolio quite yet. That said, let's hop over and check out the impressive results so far. All right, we're out on M1 Finance and we are in the HODL Factory. And you can see I only have $12,000 in the HODL Factory currently, and I've been dollar cost averaging in all of my YouTube money. I had to move that down to $225 a week, unfortunately. More to come on that on my regular monthly update. So let's start out on year to date. So we'll scroll down here and you can see that year to date, the HODL Factory is up 17.47% to the market's 14.68%. So far this year, we're doing fairly well. And when you look at the 1 year performance, you have the HODL Factory up 39.88% to the market's 24.87. So in the last year, we're up 15%. And in the total time frame, the HODL Factory is up a whopping 52.34%, and the market in that time is 34.31. And one thing I love about M1 Finance is it has money weighted returns, so it shows how the moves have paid off over time. It's hard to skew the data. It properly assesses our portfolio management scorecard, and it also includes like your sold positions, whether it was a gain or a loss, so it assesses everything. Of course, it doesn't reflect the taxes from the turnover, and our turnover has been relatively high, so that's something to keep in mind. You know, I just realized you guys will probably want to see the specific return data out here instead of just the snapshot. I'm so used to looking at everything on Seeking Alpha, because that's where I aggregate, that I forget to show some of these details. You'll see this on the backtest as well, but I might as well just show you. I won't read them all off, but let's just check out how each position has done from a total return perspective. Oh, here we go. So this is just total gain. You can see Avgo, and we've had that one for a while. We're up 187.7% on it. And I'm just gonna scroll down. I'm not gonna read all these, but I figure you might be interested in seeing which holdings have done the best for us since we've held them. And we'll see all these companies in the back test, but I just wanted to give you a quick snapshot. So feel free to pause this or do your own research, but this is how they've actually performed since we've held them. And it's not necessarily the whole duration of the HODL Factory. We've had quite a bit of turnover. For example, we just picked up CAT in our most recent update for the first time ever. So a lot of these holdings are newer that haven't performed well yet in general. And then of course like Broadcom and some of these ones, in fact all these ones have been around for a long time. So it makes sense. Just so you can get an idea of the horses that have carried us so far. This is a spreadsheet I keep that shows some key metrics about the HODL Factory holdings. You can see right now, the one I want to point out on this tab is that the forward PE ratio is 22.9 right now for the holdings that you can see here. It's actually slightly lower, a little more of a value tilt than the S&P 500 right now. But the tab I really want to show is the key metrics, and this shows how it compares to the market, which I use VOO for. So right now, these are all properly weighted with some product formulas. So the 3-year dividend CAGR is 20.4% for the HODL holdings and 7.8% for VOO, and the 5-year dividend CAGR is 18.6% per year compared to 4.4%. The total yield is a little lower than VOO to start. It's 1.1% to the market's 1.27%. And then the payout ratio, you want this low. It's 21% compared to the market's, I think via Google, 36.9%. You have the 3, 5, and 10-year total returns. So on the 3-year, it's up 91% compared to the market's 34%. And on the 5-year, it's up 256% compared to the market's 103%. And on the 10-year total returns, it would be 755% compared to the market's 236%. The weighted net income margin is 26.7% to the market's 11.5%, and the free cash flow margin is 18.7% to the market's 8.4%. So you can see on a lot of key metrics, these companies do extremely well. And then here's the total return, and this is money weighted. So this is directly from M1 Finance. I update this weekly and put it out for the members. As of 6/28, the HODL Factory year to date is up 17.52% to the market's 14.72. Its 1 year is just under 40% to the market's 24.82. And since inception, the total money weighted return is 52.5% to the market's 34.25. And these return figures do include all sold positions as well. It assesses the account as a whole, which is nice. So you benefit from, or it goes against you for all the gains and losses that you've had on your positions within the portfolio. I like how M1 Finance handles that. Time to jump into something a little bit more crazy. Backtest versus VOO and My ETF mix. Major disclaimer for this section. We have not own these companies for the entire backtest that we're about to view. This is strictly a what-if scenario to show how the current mix would have performed over the last 12 years if we did hold them during that time. Our screener would likely not have picked all these companies up over the last 12 years, and we are not claiming that the performance will be this good moving forward. But as my nephews would say, bruh, this thing is wild. Check it out. We're out on Portfolio Visualizer to run the backtest. So for our settings, we're going to be looking from January 2012 through 2024 with year-to-date included. These amounts look random. I do it to roughly mimic my current value with my mix to see how it would have compared if I had invested differently. So in 2012, we started with $85,000 and contributed $2,000 a month. And we're going to reinvest dividend, yes, and display income, yes. So it's time to analyze the portfolios. We'll start in the performance summary section, and we started with $85,000 in each fund, and we'll cover the funds here in one moment, and we put in the $2,000 a month. So our ending balance with the HODL Factory would be $3.15 million. My mix, which is my actual mix, and this is my real portfolio value about, hence those numbers to back our way into this, is about 1.4 million. If I would have invested in the HODL instead, it would be at 3.15 million. If I would have invested in VT, which is the total world stock market, we'd be at 866,000. And if I would have put it in the market, VOO, the S&P 500, it would be at 1.22 million. So I've outperformed the indices over many years, but the HODL Factory, which again, this is hindsight's 2020, I haven't actually held them, it really dominated. But you can see these returns, the time weighted and money weighted, are absurd. For my mix, that's pretty high right there. Over 16% returns on both time and money weighted for 12 and a half years is pretty incredible. But the markets also had a wild bull run at over 14%. We'll get more into the performance down below. Standard deviation you want low. This is a little scary. It's almost 19 compared to my mix of 14 and a half, and the market's right there as well, and same with VT. The best year is incredible, but the thing that stood out to me the most out of all this is the worst year. The worst year in the last 12 and a half years with the HODL Factory would have been negative 8%. And you can see the other ones were right around 18% each on their down years. Moving on to the annual returns, and you can see we're here from 2012 through 2024 year to date. The HODL Factory is the blue bar. My mix that I roll with is the green bar. The gray is VT, and the teal is VOO. You can see that the HODL Factory has won the majority of the year. Geez, almost every year. Didn't win this one, didn't win this one. Man, it was positive in 2022. That's kind of wild to think. 0.35% positive, whereas the best of the other ones was negative 17.65%. Then it had an incredible 2023. So far in 2024, it's been pretty tame. The HODL Factory's returns look pretty good on a consistent basis. So here's our trailing returns. This doesn't care how much money is being dollar cost averaged in. It just shows the annualized return every 3, 5, 10, and the full 12 and a half years. You can see the HODL Factory, this is pretty wild. It's at 25.5% over the last 3 years, whereas my mix is down to 9.9%, and the market's actually a little ahead at 10%, and VT's way down there at 5%. Over the last 5 years, it's up over 30% compared to my mix of 17 the market of 15, and VT at 10.7. And over the last 10 years, it's at 24%. And the full 12 and a half years is at 25.4%. That's just goofy. And the other ones though, again, it's been a strong market. You can see VOO here is up 12.8 and 14.6 in the last 10 and full time frame. And VT is looking at 8.5% in the last 10 years and 10.4% in the full duration. VT's really been lagging for the last many years. Oh, okay, and this one I find pretty wild, because the dividend yield is pretty low for the HODL Factory, but its growth rate of around 20% in the last 3 years really starts to add up. You can see you start the lowest, and that makes sense because it's a low yielder, but then over time with the dividend growth consistency, it really starts to spring up. And my mix is known to grow dividends well, SCHD and VGT and even QQQ, but the HODL Factory just obliterates it over time on total income. In 2024, some things have hit so far and some haven't quite yet, so that's a tough one to assess. But VT outperforms the market on dividends, and you can see that it lags behind both my mix and the HODL Factory here over time. In 2023, the last full year, we're looking at $30,700 per year for the HODL Factory, my mix at $20,200, and VT is at 15.7K. So let's quickly view the holdings of the HODL Factory. And you can see that we have a 4% weight for each company that we have in the mix. And it shows the yield of each one as well. So as we scroll through, and I'm not gonna read these all off here, I'll let you pause and look, but these are the 25 tickers that we currently hold in the HODL Factory. You have a wide mix of companies. You see Broadcom made the list there. As we'll scroll down here, you have MasterCard, Visa's in there as well, we'll get there, Microsoft. So, and then you have things like Old Dominion Freight Line, you have Reliance Steel, Steel Dynamics, Texas Pacific Land Trust. I mean, we have quite the hodgepodge of holdings. I'm not sure why this isn't in alphabetical order, but we have Hawkins down here as well. And you can see our asset allocation is 100% US stocks, and we're mostly large cap companies. We have a little bit of mid and a slice of small as well. And when you go down by sector, you can, well, clearly you can see one of our rules for the fund is a 20% cap. You see basic materials is at 20%, consumer discretionary is at 12%, we have energy weighing in at 8%, the financial sector is 20%, industrials is 20%, and tech is 20%. And I should show my mix as well. So this is SCHD at 33%, VOO at 33%, and then you have VGT and QQQ. This is my, and I actually hold QQQ in, but it doesn't have the history for backtest. It's the same thing with the lower expense ratio, but this is a third of growth, a third of value, and a third of the market. And you can see my weighted yield is 1.77 on the trailing 12 months. The expense ratio is 0.08. It's actually a little lower, but that's close enough. And the PE ratio is right there at 25.22, which is higher than the HODL Factory's PE ratio. You can see my mix is pretty heavy in tech at 38.9%. I am a tech bull. See, just roll with the HODL Factory and you can double the market every year. I'm just kidding, but a man can dream. The future. Running the HODL Factory is genuinely my favorite thing within the investing world. I don't know if we'll beat the market over a long period of time, but I do know that we'll have a blast and we'll do the best that we can. I can't wait to share more with you guys in the future. I plan on doing a quarterly update for the HODL Factory. And the channel members have access to my weekly updates to show how we performed against the market. That spreadsheet's out there on the server. Speaking of my awesome members, we had 4 new members this week. A huge shout out to the 4 of you on the screen now, particularly one of you, and you know who you are because I know you in real life and I appreciate it. And honestly, a huge shout out to everyone that's been here all along. This is really cool, you guys. It's making this possible and I'm having a blast. And check out one of these 2 videos if you still want to learn more about this stuff. I'm telling you, you're going to cruise your way into financial freedom if you keep growing. Thanks for watching, and I will see you in the next one. Bye.